You get into a car accident and the insurance company tells you your vehicle is totaled. That's stressful enough. But then you find out you still owe thousands of dollars on the loan, sometimes more than they're offering you for the car. Now you're stuck wondering how you're supposed to pay off a vehicle you can't even drive anymore, and whether the insurance check is actually going to cover what you owe. I'm Kevin Cheney, a personal injury attorney here in Colorado, and I've worked with many clients who are blindsided by the financial side of the totaled car, especially when there's still a loan balance involved. In this video, I'm going to walk you through how a totaled vehicle claim works when you still have a loan, and what happens if the insurance payout is less than what you owe, and what options you may have to protect yourself financially. Because if you don't understand how this process works, you could end up paying out of pocket for a car that's already gone. And that's a tough position to be in if you're not prepared for it. The first thing you're going to want to do is get two numbers in writing: the insurance total loss value and your loan payoff. Right now, you're juggling two totally different numbers: what the car was worth the second before the crash, what the insurance wants to pay, and what you still on the loan, what your lender wants paid off. So today, your first move is simple. Get both numbers in writing. Ask the adjuster to email you their total loss valuation report, how they decided your car's value, the exact settlement amount they plan to pay. Then call your lender and ask for a 10-day payoff statement. That's the amount it takes to pay the loan off right now, including daily interest. Why this matters: I've seen people agree to a settlement, sign paperwork, only then find out that the payoff is higher than they thought, so they're stuck covering the gap fast. Next, we need to make sure you don't accidentally mix up the car claim with the injury claim, because that's where people get burned. The second thing is keep the car money separate from the injury money. In Colorado, the property damage part of your claim, your car, is one track. Your bodily injury claim is another track. And here's the trap: sometimes an insurance company will slide over a document that looks like total loss paperwork, but it includes a release that can impact your injury claim. So before you sign anything, ask one direct question: does this paperwork release my injury claim too, or is it property damage only? If they hesitate, if it's vague, or if it says anything like full and final settlement, slow down. Because once you sign away your injury claim, it doesn't matter if your neck starts hurting next week. You may have just closed the door. Now let's talk about the one thing that decides whether a totaled car with a loan is a headache or a financial disaster. You need to find out if you have gap insurance, and don't assume that you do. If your loan payoff is higher than the insurance value, the difference is called a gap. Here's an example. Insurance says your car is worth $18,000, but your loan payoff is $24,000. That's a $6,000 gap. A lot of people say, I have full coverage, so I'm fine. Full coverage usually means collision plus comprehensive. It does not automatically mean gap. So you need to check your auto policy declarations page. Look for gap or loan lease payoff. Your loan paperwork. Some lenders sell gap at purchase. Any add-on warranty products you bought at the dealership. If you do have gap, ask what they need to open the claim. Usually it's the insurer's total loss paperwork, the payoff statement, and proof of the settlement amount. If you don't have gap, don't panic, but you need to be smart about the next step, making sure the car value is as high as it should be. Challenge the total loss value. Most offers are negotiable if you do it the right way. In Colorado, insurance companies usually base a total loss offer on what they believe your car's actual cash value was. Basically, what it would have sold for right before the wreck, considering age, mileage, trim condition, and the local market. Here's what I want you to do before you accept their number. Step A: read the valuation report like you're looking for mistakes. Common issues include wrong trim, LX versus EX, base versus upgraded, missing options like AWD, safety package, tech package, the wrong mileage, condition marked as worse than it really was. If the report says your tires were poor and your interior was fair and that's not true, that can drop value. Step B, pull 3 to 5 local comparable listings. Look within Colorado if possible, Denver, Aurora, Colorado Springs, Fort Collins, whatever matches your market. Same year, similar mileage, same trim. Step C, send a short, calm email, something like, "Thanks. Attached are comparable listings and corrections to the option's mileage. Please review and update the valuation." You don't need to be aggressive. You need to be specific. Because every $1,000 in value is $1,000 less you might have to pay out of pocket if you're upside down on the loan. Now, let's talk about where the check actually goes, because a lot of people think the money is coming to them, and then it doesn't. Know who gets paid first. The lender usually controls the settlement. If you have a loan, your lender has a legal interest in your car. That means when the car is totaled, the settlement check often gets made out to you and the lender or directly to the lender. So don't plan on using that insurance money as a down payment on your next car unless you've confirmed how it's being issued. Here's how it usually plays out. Insurance calculates the value. They pay the settlement. The lender applies it to the loan balance. And if there's money left over, then you get the remainder. If there's a shortfall, you still owe the difference unless GAAP covers it. And if there's a shortfall and you ignore it, it can turn into collections, credit damage, and in extreme cases, a lawsuit for the balance. So call the lender after the settlement is issued and ask, once you receive the insurance payment, what will my remaining balance be? Next, we need to cover a choice that can change the numbers: salvage. When keeping the car helps, and when it's a money trap. Sometimes the insurance company will offer 2 options. Option 1, they take the car and pay you full settlement amount minus deductible if it's your policy. Option 2, you keep the car with a salvage title and they pay you less because the wrecked car still has value. Keeping the car sounds tempting if the damage doesn't look that bad. You think you can fix it cheap. You want to sell parts, or you're emotionally attached to it. But here's the real world issue. If you still have a loan, the lender often won't love the idea of you keeping a totaled car as collateral. Plus, rebuilding salvage can be more expensive than people expect. In Colorado, a salvage vehicle can also bring extra steps and inspections before it's road ready again. The details depend on the situation, but the big point is this. Don't choose keep the salvage unless you've done the math with your lender and you understand the title repair process. There are a few extra dollars people forget to ask for, stuff that can help cover the gap. Don't leave money on the table. Taxes, fees, rental, and personal property. When you're upside down on a loan, the little add-ons matter. Here are the common ones that you should be asking about: sales tax, title, and registration. Sometimes you may be able to claim taxes and certain fees tied to replacing the vehicle. Whether it applies depends on your policy and the claim situation, so ask directly. Does this total loss settlement include sales tax, title, registration fees? If not, what do you need to add them? Rental and loss of use, if the other driver was at fault, you can often push for a rental or a loss of use payment for the time you reasonably needed transportation. If it's your own policy, rental depends on whether you bought that coverage. Let's talk about personal items: car seats, tools, sports gear. If it was in the vehicle and damaged, tell the adjuster. Don't assume they just know. Now, medical bills are separate. If you were hurt, don't let them rush you. In Colorado, car crash injury claims have real deadlines, and they can sneak up faster than most people think. So don't trade away your health claim just to close the car file. Now let's tie this all together into a quick, practical game plan that you can follow today. A simple today and tomorrow checklist to handle this cleanly. Today, get the insurer's valuation report in writing. Get the lender's 10-day payoff in writing. Confirm whether you have GAP, policy plus loan paperwork. Do not sign anything that isn't clearly property damage only. Now, tomorrow, challenge the valuation if anything is wrong, options, mileage, comps. Confirm how the settlement check will be issued, you versus you and the lender. Ask about rental loss of use and personal property, and decide on salvage only after you see the real math. If you do those steps, you'll avoid the big disasters, a surprise balance, a credit hit, or signing away your injury claim by accident. Today, you learned how to handle the exact situation that nobody warns you about. Your car is totaled, you still have a loan, and the insurance number and the loan number don't match. You now know how to lock down the right numbers, check for GAP, fight for a fair total loss value, understand how the lender gets paid, and avoid signing something that could wreck your injury claim. Next, you need to watch my video called 5 Biggest Mistakes People Make After a Car Accident in Colorado, because these mistakes are how people accidentally lose thousands of dollars, hurt their case, or get pushed into a fast settlement they later regret.